And welcome back. Interest rates could be going up again. The Federal Reserve just got approval for a hike last month as it tries to reel in inflation. So to help us understand the impact of higher interest rates on what they do to our investments and other things, we're joined by our financial advisor, Bruce Allen from Bruce G. Allen Investments. Good to see you.
Good to see you too.
All right. So interest rates are going up. They've gone up pretty fast this year. How is that affecting like the bond market and that sort of thing?
I think what we've seen most recently is a pretty stunning rise in interest rates. This year, the 10-year Treasury bond, which is the benchmark bond, it's the Dow Jones Industrial Average of the bond market, started the year at 1.51%. Last night, we got up to 2.56. This morning, we're over 2.6%. So interest rates on that 10-year Treasury bond are rising very rapidly, and that has a big impact on how much it costs to loan money, borrow money, and so forth across the economy.
Yeah, talk about some of the things that affects, because that affects a lot of stuff you and I deal with every day.
So new home buyers are going to see this right away. Mortgage costs have risen dramatically. They were in the low 3% when we started the year. Last night when we were talking about this, before we talked about this, we saw that the 30-year mortgage rate had hit 4.8%. What that means for the average home buyers, if you're buying a $500,000 house and you have a $400,000 mortgage, the increase in interest rates this year has raised your monthly payment by about $200.
Yikes. Yeah.
Now, and that's going to possibly get worse as we go through, because the Federal Reserve is going to raise rates another 5 or 6 times this year. So we may see these rates continue to rise.
Yeah, and it affects more than just homeowners too, right?
Absolutely. Car loans, credit card debt, student loans, so all those loans may be impacted as we go through the year here. And what that may mean is that some people are saying, hey, if you're thinking about buying a house and you're worried about rising interest rates, do it sooner than later. If you're thinking about buying a car and you're going to borrow money to buy the car, do it sooner than later, because these rates may continue to go up.
And this is all fueled at least partially by inflation, and they're just trying to get a handle on that, and that's just not been happening.
Not yet. We were already struggling with inflation before the war broke out, and the Ukraine is a huge producer of corn and wheat. Natural gas and oil flows through that on the way to Europe, and so we've seen prices of all commodities rising very dramatically as a result of this war, and they were going up before that, Gary.
Yeah, so buckle up. Looks like these higher interest rates are going to be around for a while. As always, good to see you.
You too.
Okay, thanks.